Let's get right into it. 2025 is shaping up to be one of the most unpredictable years for investors in recent memory. The financial landscape is shifting rapidly, and it's easy to feel overwhelmed by all the changes happening around us. Interest rates remain stubbornly high, inflation isn't going away anytime soon, and the stock market seems to be on a roller coaster ride. Every day brings new headlines that make it feel like the ground is shifting beneath our feet. It's no wonder so many people are feeling anxious or even paralyzed about what to do with their money. Every headline seems designed to scare you out of investing, but here's the truth. Doing nothing is usually the worst move you can make. Even in uncertain times like these, there are still smart, low-risk ways to grow your money and build a more secure future. The key is to focus on strategies that work in any market, not just when things are booming. You don't need to be a financial expert or have a huge income to get started. All you really need is a solid plan, a bit of discipline, and the willingness to take that first step toward your goals. In this video, I'll walk you through 6 beginner-friendly investments that offer low risk and solid returns, even in a challenging year like 2025. Plus, I'll show you exactly how to get started with as little as $10, so anyone can begin building wealth. By the end of this video, you'll have a clear, step-by-step roadmap to start investing confidently, no matter what the market's doing or how much experience you have. So smash the like button, subscribe if you haven't already, and let's dive right in to discover how you can make 2025 your best investing year yet. First up, high-yield savings accounts or HISAs. Forget your old bank's tiny interest rates. Online HISAs offer 4-5% APY, sometimes more. They're perfect for your emergency fund or short-term savings, safe, FDIC insured, and zero risk. Getting started is easy. Compare rates on sites like NerdWallet, pick an account with no fees, and apply online. Link your checking account, set up automatic deposits, and watch your savings grow on autopilot. This is free money, no risk, no hassle. If you do nothing else, do this. It's the foundation for your financial future. Don't leave your cash earning pennies. Make your money work for you. Seriously, there's no reason not to. Next, let's talk I bonds and U.S. Treasury securities, 2 of the safest ways to grow your savings while keeping your money protected. These investments are fully backed by the U.S. government, which means your principal is about as secure as it gets, making them ultra-safe, even during uncertain economic times. I bonds are especially unique because they protect your money from inflation. Their interest rates adjust every 6 months, so your savings can keep pace with rising prices, helping you maintain your purchasing power over time. You can buy up to $10,000 in I bonds per year, per person. You must hold them for at least 1 year, and if you cash out before 5 years, you'll lose the last 3 months of interest as a penalty. But for many, the benefits far outweigh this minor drawback. Even with that penalty, I bonds often deliver returns that beat regular savings accounts and even many CDs, especially when inflation is high. Treasury bills, notes, and bonds are also government-backed and offer attractive yields right now. They come in different maturities, so you can choose what fits your goals, whether you want short-term flexibility or long-term growth. You can buy all of these directly at treasurydirect.gov. The website might look a bit old school, but it's safe, secure, and gets the job done. Setting up an account is straightforward. Just link your bank, verify your identity, and you can start investing with as little as $25 for most securities. Once your account is ready, simply choose your security, enter the amount you want to invest, and confirm your purchase. It's that easy. Adding these government-backed options to your portfolio is a smart way to create stability and balance, especially if you want to reduce risk. If you're looking for safety, steady returns, and peace of mind, I bonds and Treasury securities are a great move for any saver. Don't overlook these government-backed options. They could be the foundation of a secure financial future. Third, let's step into the world of the stock market with S&P 500 index funds, often called the ultimate set-it-and-forget-it investment. These funds are a favorite for both beginners and seasoned investors because they make investing simple, accessible, and effective. Instead of stressing over which individual stocks to buy, you automatically own a slice of 500 of the largest and most successful U.S. companies. Think Apple, Microsoft, Amazon, and hundreds more. This gives you instant diversification, meaning your money is spread out across many industries and companies, which helps reduce your risk if one company stumbles. Historically, the S&P 500 has averaged about 10% annual returns over the long run, making it one of the most reliable ways to grow your wealth over time. Plus, fees are super low, often just 0.03%, so more of your money stays invested and compounds faster, instead of being eaten up by high management costs. To get started, simply open a brokerage account with trusted companies like Fidelity, Vanguard, or Schwab. Link your bank account and search for popular S&P 500 funds like VOO or FXAI. You don't need a fortune to begin. Start with as little as $50, thanks to the option to buy fractional shares, which lets you invest any amount, big or small. Set up automatic recurring investments each month and let dollar cost averaging work its magic, smoothing out the ups and downs of the market over time. This is truly the simplest and most effective way for anyone to start building long-term wealth and take part in the growth of the entire market. Fourth, dividend ETFs. Perfect if you want regular income from your investments. Dividend ETFs invest in stable, profitable companies that pay out cash to shareholders. You get diversification and steady payouts, all in one fund. Reinvest those dividends to supercharge your compounding. Your money earns more money automatically. Open a brokerage account, search for top dividend ETFs like SCHD or VYM, and enable automatic dividend reinvestment. Invest consistently, even if it's just $50 a month. Over time, you'll build a portfolio that pays you, not the other way around. It's a powerful way to grow wealth and generate passive income. Let your investments work for you 24/7. Start small, stay consistent, and watch your income snowball. Fifth, if you want a hands-off approach, try robo-advisors. These automated platforms build and manage a diversified portfolio for you, based on your goals and risk tolerance. Just answer a few questions, and the algorithm does the rest. Asset allocation, rebalancing, even tax optimization. Apps like Betterment or Wealthfront let you start with as little as $10. Set up automatic deposits, and your money is invested every month, no effort required. Fees are low, usually around 0.25% per year. It's professional management without the high cost. Perfect for beginners who want to invest but don't want to stress over the details. Let technology handle your investing so you can focus on living. Sixth, want real estate exposure without a huge down payment? Try real estate crowdfunding. Platforms like Fundrise or Arrived Homes let you invest in large real estate projects with as little as $10. You get potential appreciation and rental income. No landlord headaches. The platform manages everything. You just collect your share of the returns. Know the risks, your money is locked up for years, and there are management fees. Only invest what you can leave untouched long-term. Still, it's a great way to diversify beyond stocks and bonds. Getting started is easy. Create an account, answer a few questions, and invest online. Real estate investing is now accessible to everyone. There you have it, 6 low-risk ways to start building wealth in 2025, even as a beginner. You don't need to time the market or chase hot stocks. Just build a solid, diversified foundation. Start with high-yield savings, I-bonds, S&P 500 funds, dividend ETFs, robo-advisors, or real estate crowdfunding. Pick one or two, start small, and be consistent. Set up automatic investments to stay on track. The journey to financial freedom is a marathon. Small steps today build your future. Which one will you try first? Let me know in the comments. If this helped, subscribe, and remember, your future is worth investing in. And don't forget to subscribe to the Finance and Wealth YouTube channel for more tips and strategies to grow your wealth.